Good morning and welcome back to another episode of Weekly Review of Indian Equity Markets. And before we go ahead, let me give you the standard disclaimer. I'm not a SEBI registered advisor, nor I'm a trainer or a teacher. I'm not trying to kind of help you guys take trading in the market. I'm just trying to review the markets for my own benefit because it helps me to kind of channelize my thought in the right direction as I do these weekly reviews, and it helps to look at the markets in the right fashion as we get into the action through the week. So that's the objective of this video, and without much ado, let me kind of just quickly get going with what the week was. Right. So this week Nifty printed a nice wide range candle with a volume pickup. It closed the week almost 2% higher, and it's very heartening to see the way that this week's candle is printed. So the element of doubt which was persisting for last 5 6 weeks has shifted again into bull phase as we close this week on a fairly positive note. So this is the first week where we are closing on a higher high format for the first time after after a downward push for last 6 weeks and 2 weeks of minor consolidation. In the process, we obviously have taken out a very important level of 19,580, which was definitely a place to watch out for. And good thing is, as we were talking last week, as we were kind of doing the review last week, we said that 19,200 and this gap region was an important region to watch out for. So this week, we saw fairly decent positive push, especially on Thursday and Friday. So on a weekly basis, we definitely see a positive candle with a uptick in volume. This is definitely positive, and we are fair distance away from 30-week moving average as well. While the plot here is 50, but 30 from a 30-week moving average as well, we are some distance away. Now let's move to daily time frame and see what is happening on daily time frame for the week. So as we closed last week, we said that this was a fairly decent candle and a positive candle, especially the reason was that one, it's a bullish candle. There was some volume uptake which was happening if you were to exclude the mid-year, half-year end candle that we were talking about. This was definitely a positive candle. We started off the week well with a fairly decent tail, while the volumes were not very, while the body of the candle was not very positive or not very strong, but it was definitely a positive candle bouncing right above 50 DMA, which was the first positive sign. Then we had two good candles. Again, we remained above 50 DMA. A test of 50 DMA happened. Yeah, and all along, the 50 DMA has been in upward trend. We haven't seen a single day or a indication of 50 DMA turning, which is very positive. And then on Thursday we had a very strong wide range candle. Obviously, we'll see as to what is driven this wide range candle, and then yesterday we had a decent close. While the body of the candle and both wick and tail are present, which is a kind of an indecisive candle, but overall it's a positive candle and it's a very positive week to say so. So from a short-term trading perspective, as we were talking about the fact that a range is forming and we should consolidate before we take off. So this week we saw that happening, and on Wednesday, and as we had marked out this level 15,580, 570, 590 kind of levels, this was definitely a range to get going in terms of long position, and then add some more as the Thursday closing was very positive. So that's predominantly what one should have seen as far as the Nifty is concerned. Uh, so what do we see from here? We essentially see a minor pullback, which played out for almost 5 6 weeks. Some bit of very narrow bit of consolidation that we have seen over last 2 weeks or so, and then we have taken off again. Uh, how do we rate this from here? Given that there's quite a bit of action-packed months lined up ahead, I think we have to be cautious from here. Uh, while we have built a position, we have to be cautious from here and slowly but surely uh, try and see as to every single candle which gets printed, we have to be cautious. And if the Nifty takes out all-time high, which is 20,000, 20,100 kind of levels, I think this upward push will actually take out that level and may move little ahead. But one should be very cautious from here. And this trade that we are looking at is coming at a point where there are quite a few of news-driven activities lined up over next 6 months. So trade with caution, uh, trade with adequate safety, or trade with adequate risk management in place. That's how I would look at this particular trade playing out from here. As we have seen both on weekly and daily chart, uh, so the logic of taking a position at 19580 was the breakout of this minor stage uh, that we have formed after a decent pullback of last 5 6 weeks, as we were continuously talking about. And then as it broke out the actual larger stage, we should have built more positions out there, which is between these two levels. Though there's not much of difference, there's 100 point, but it gives you a lot of cushion, because as I said that we need to have up our game as far as the risk management is concerned. In this particular trade, we are definitely likely to take out the all-time high, but while taking out the all-time high, we should be cautious of the fact that we are there are quite a bit of news items which are lined up, which can, or heavy action items which are lined up, especially in context of India. So we may have a sharper pullback as index starts moving higher and starts sucking in a lot of investors. So broadly, that's what we look at as far as the Nifty is concerned. Let's look at the most important component of Nifty, which is Bank Nifty. Yeah, so this is how the Bank Nifty candle has got printed this week. If you see, Bank Nifty is up 1.5% or 1.6% to be precise for the week, and in the process, it has taken out the stage that we were talking about over last couple of weeks. Uh, Again, in case of Bank Nifty, if you see, we have seen a downward pressure after forming a all-time high at 14,400, 46,400 levels, and now after kind of taking support at the previous consolidation zone, which is 43,600 kind of levels, we are now again pushing higher. So the candles which formed last week and the week before that were not so great candles, while last week's candle was definitely positive, and that is what we ended up saying as far as the when we were reviewing the candle, that it was definitely a positive candle. This week, uh, obviously, the much more positive candle, and definitely calls for some bit of uh, risk-adjusted position building in the Bank Nifty indices. Now, see what has happened with Bank Nifty this week. Let me take out all the markings, all the indicators. So this is daily chart of Bank Nifty. This is what we closed the previous week at, which is a positive candle, not completely engulfing, but a definite positive candle. And when we mark out moving averages, it consolidated right below moving average, but then it took out the moving average this week. And in the process, it has also broken out of a stage structure at this point. And look at the contraction which is playing out. I think what we are looking at is a nice, beautiful contraction which is playing out, and we have definitely moved way ahead. When we convert this into a hourly candle, we get to see a much better and and stronger picture, or a much clearer picture. We were talking about this kind of stage formation and and a breakout of this stage will be positive, which is what we were talking about last week. And we were so let us see. So this was Monday. This is where it was. So last week when we made a possible playout zone, we exactly kind of printed something like this. We can always look at what we printed last week, a particular picture, and come back, which I will definitely look at and post uh, in this chart itself. But yeah, we were talking about the fact that if Nifty goes up, then consolidates, and then takes out, this would be the level to watch out for. And once it takes out this level, to add position, and this would be a proper stage breakout on a hourly time frame, and this is what we have seen this week. So it's a overall positive. Bank Nifty is again very positive. I think as we close the week, we have seen positive outlook both on Nifty and Bank Nifty. So which puts things back in right perspective. Now, what is happening with other indices that we track, which is CNX 500, is what we track on a weekly basis. See what CNX has done, Nifty 500 has done, which is the broader market. So with support coming in from Nifty and Bank Nifty, and as we were talking about the fact that when these were printing, we were talking about the fact that it is being pushed up by the amount of rally that we are seeing in mid and small cap. This week, we got more fire to the fuel by way of large caps, also adding to the pressure which is being upward thrust, which is being built here. So we've got a nice wide range candle with a 2.5% up move in broad market index, which is Nifty 500. So overall things remain very positive. Let's look at few of the indices and structure within those indices. We were talking about metals being positive. So metal staged a stage breakout and has moved into all-time high. This was a very nice, strong, solid candle, and then we continue to move higher. This is one index which one should keep in mind. This is a very interesting chart. I was looking at this. So look at the way service sector is kind of consolidating over last many years now, almost a year plus now, right? So it can be or in fact 2 years now. So it can be very interesting to see how this service sector breakout happens, and if that were to happen, then we'll get some nice buying opportunity out there in service sector. So the 100% move, consolidation, strong consolidation playing out, and then a breakout can be very positive. We've covered this. Infra continues to move higher. This is risk which people have to appreciate. If you don't, then we will unnecessarily get stressed. Nifty Auto is doing well, but I think from a risk reward perspective, it is not in favor of investors. PSU Bank is staging another breakout. It is something which has caught the attention of all the investors, and it is doing very different kind of things. So one should be careful out here. Auto we have reviewed, PSU Bank consumption we've reviewed. Consumption is breaking out again. Let's look at FMCG, which is another large weight in the market. So FMCG is where there are opportunities very clearly. So three indices, and most importantly, I think where one should look at trading is IT. So CNX, Nifty IT, FMCG, service sector, metals. These are three sectors, and let's look at consumer durables also, because that was also doing the right things. So these are three or four indices which one should be interested in. Rest, I think we are in a stratosphere. One should look at possibly trying to see how they can keep booking profits or be aware of the fact that what is happening in the market and should be ready to take action swiftly. So that's all for this week. Let's also look at, okay, before we close down, let's look at what is happening with the global indices. So NASDAQ, you're talking about NASDAQ. Let's look at daily time frame. Let me remove everything. So NASDAQ has seen a correction. It is consolidating now. It was consolidating It is consolidating. It kind of went below 50 DMA. There was a rejection of 50 DMA. This week's action in Nasdaq is actually not very positive, nor it is negative. So it's kind of just biding some time. Clearly, I think this gap region is where it has countered and had seen some bit of challenge, and then it's kind of. So this was last Friday. It failed at the gap, and then now it is again consolidating. So I think this is the stage structure we can draw as far as Nasdaq is concerned. I think SPX was much more positive, or the stage was a little more clearer in SPX. Now in Nasdaq also we have a clear stage visible. Yeah. So this is SPX. And this, if this were to be the stage, there is a breakout, and then again, but I think much better way to look at stage would be this one, and this is a 5% range. So let it consolidate between these in this 5% range, and then let's see what kind of SPX, what is it that SPX would like to do. But yeah, this is how the SPX is looking, or else let it form a nice contraction or some kind of pattern out here before we kind of dig deeper into SPX. So broadly, that is what the week looks like. Let's look at Nifty and try and see what basically we want to build as a possible or probable outcome. So as I was saying that, this is a level which is definitely on the cards very soon, right? And we are not very far from there. So there's no rocket science out here. The point is, how far can we go from there? We do this and do something like this. Yeah. So this is what is a probable or possible outcome as far as Nifty is concerned. Don't consider this as a level, or I'm giving out some kind of level. I'm just saying that this is what the structure can look like over a period of time. But be careful, be cautious, especially in mid and small cap. The opportunity is now back again in favor of investors who are looking at banking and large cap stocks, especially. So that's it for this week. I think we have had a good week. I hope Nifty continues to build on from here. Thank you so much, and look forward to seeing you again next week.